Good afternoon, ladies and gentlemen. It is the first Friday of August, the first Friday of the month. Of course, I wish everybody to have a great month ahead, hopefully a successful month as well. Of course, because it's the first Friday of the month, it is, of course, NFP Friday. Now, NFP in 2025 has probably been the most difficult for economists, not necessarily for traders. Don't forget, traders, because they can speculate both directions of the market, they don't really care whether the NFP is higher or whether the NFP is lower. But of course, economists, they always provide projections for NFP. And in 2025, it has been one of the most difficult years in order to predict the NFP data. So today we're of course looking at NFP. We're specifically looking at NFP for gold because we want to know how to trade gold. We're going to be looking at what the current signals are in terms of technical analysis. We're going to be looking at real trade potential setups. And of course, we're going to be looking at fundamental analysis in order to validate our signals as well. So we're going to be looking at multiple factors of analysis. We're even going to be looking at partially order flow analysis, which is the analysis which institutional traders look at in order to predetermine how the market is likely to move. Now, for our beginner traders that have never traded before, a lot of people are probably thinking, what is NFP? So very quickly, I will explain to everybody what NFP is. And I also, in a moment, will get our calendar up for everybody, which is provided to all traders for free, along with most of our educational tools and trading tools and trading accounts are provided, of course, for free. Now, what is exactly NFP? Now, NFP, ladies and gentlemen, I will share our calendar as well. Bear with me. There we go. So you can currently see our website and we've got here our calendar. Now, financial trading assets, instruments, should we say, they see volatility depending on buy and sell orders. Now, buy and sell orders, which are being triggered by shareholders, traders, investors, institutions, companies, and so on and so forth, their should we say, influence, their decisions are impacted by what is being released within the financial trader markets. Now, the three pillars, which are the largest drivers of assets, are number one, employment, number two, inflation, number three is the economic activity. Normally, individuals will look at the gross domestic product. And the fourth is the fiscal and monetary policy. Now, one of the biggest drivers of the fiscal and monetary policy is, of course, the employment data. So NFP, ladies and gentlemen, is basically within a single month, it will confirm how many individuals are employed within the country, and normally it will be shown as a plus or minus figure. So rather than saying, for example, in the United States of America, there's 150 million employed individuals, they will only confirm the change. So at the moment, you can see here NFP for the month of July, which has just ended. It is expected that there will be 110,000 more employed individuals within the United States of America. Now, there's two other major releases which are going to simultaneously be released as well. The other one, ladies and gentlemen, is the unemployment rate. Now, if we look at the unemployment rate of America, the unemployment rate has come in better than expected for 5 consecutive months, ladies and gentlemen, for 5 consecutive months. Now, if we're looking at the NASDAQ on a daily chart, on a weekly chart, even other assets as well, such as the S&P 500, the Dow Jones. If you want to look at more unique assets, you could, for example, look at the Russell 2000. When you look at their performance on a daily chart, you can see such a significant upward trend, particularly over the past few weeks and months. And one of the reasons, ladies and gentlemen, like I said, is because the unemployment rate has beaten expectations consecutively for 5 consecutive months. And that's created such a strong upward trend, ladies and gentlemen. But of course, simultaneously, there has been other aspects within the market which have been creating other types of volatility. So for example, we're going to look at gold a lot as part of today's live session. If we're looking at gold, ladies and gentlemen, if we take into consideration geopolitical tensions, which have massively escalated in 2025, even though when President Trump was originally elected as president, a lot of people believe that actually there wouldn't be escalations. So far in 2025, there has been a lot of escalations and multiple conflicts. In addition to this, there has been, should we say, escalations in the trade war on multiple fronts. Yes, we have had certain deals, but nonetheless, there's been a lot of escalations. So because of that, we've also seen a very strong upward price movement within gold in 2025 as well. We're going to look at gold and see exactly what today's NFP figure will mean for the price of gold. So that's something we're going to look at in a moment. Now, NFP is going to be released in 9 minutes, so please bear with me. So we have the NFP figure, which is the change in the amount of employed individuals. It could be a positive or negative figure. The important thing, though, is if it's higher or lower than what is currently expected. Currently, we're expecting 110,000 more employed individuals, which is quite low. But nonetheless, that has already been priced within the market. The important thing now is if the real figure will be higher or lower. We've said the unemployment rate expected to slightly rise to 4.2%. We were expecting a rise in the past 5 months. It never ever happened. But of course, we need to look at what's going to happen in the latest month because it's a completely new month. And then you've got the average hourly earnings, which is expected to rise to 0.3%. 0.3% is extremely high for average hourly earnings, ladies and gentlemen. So that would definitely be a concern for the Federal Reserve. Now, everybody's going to be wondering what is going to happen to the price of gold. Now, there's 3 potential scenarios in regards to what's going to be released with the NFP. Number 1, NFP could be lower than expected. The average hourly earnings could be lower than expected. The unemployment rates could be higher than expected. So it's indicating a deteriorating condition within the labor market. Now, if we do get that, ladies and gentlemen, that is positive for the price of gold. And also investors will really take advantage of that lower discounted price. Because if we're looking at a larger time frame, ladies and gentlemen, we can see the high that we have seen for gold actually was back in April. And the price was all the way up to here. And that is currently almost 6% higher than the current price. So, of course, when the price is lower and there's potential for the price to increase, investors really want to take advantage of that lower price. So that's something traders can, of course, take into consideration. Now, a lot of people, I can see a lot of comments here, people saying, for short-term trades, though, where potentially can we look at in order to exit the market? And that depends on your methodology and your approach. Based on technical analysis, ladies and gentlemen, there's 3 potential areas that traders may aim for if we get a really poor NFP figure, average hourly earnings, and a higher unemployment rate, which generally speaking is negative all round. That will be positive for gold, even though it's negative for the market. Why? Because, ladies and gentlemen, gold is a safe haven asset. So when there is that instability, uncertainty, traders really increase exposure to gold and reduce exposure to the stock market, to even the cryptocurrency markets, commodities, and also, of course, the US dollar. Now, based on technical analysis, there's 3 potential areas that we can aim for. For example, we've got here the resistant level, which is based on the previous swing. We've got the trend line here, which is a 75 bar exponential moving average, which has been giving us great indications, ladies and gentlemen. Amazing indications so far. And then we've got the price sentiment indicator, which is the 100 bar simple moving average. So that gives us 3 targets. Of course, if you're looking to be a very ultra short-term trader, then you're going to trade an exit most likely before any of these 3 points, but continue to trade most likely up to that resistor point. If we're looking at a swing trader, or should we say somebody that's looking to keep the trade open for 24 to 48 hours, then they would aim for the 2nd or 3rd level. So that's something, of course, for us to take into consideration. But, ladies and gentlemen, if we're looking at technical analysis, regardless of the fact the price today is increasing in value, the bias is for the price to continue moving downwards. We can see we are trading below the trend line, ladies and gentlemen. We can see definitely very clearly we're trading below the trend line. We're trading below the price sentiment line as well. If we're looking at the MACD is trading on the negative side of the MACD as well. If we're looking at the RSI, we're more or less on the neutral level. That's on a period of 14. A lot of people also take into consideration a period of 18, sometimes on the 2-hour chart. If we're looking at a period of 18, we're again at 50, so that's a neutral indication. If we're looking at the stochastic oscillator, we're almost at a point of overbought. So again, that's a slightly neutral signal there as well, ladies and gentlemen. This is for gold, by the way. Some people I can see here saying, let's look at gold. So this is for gold. Now, if we switch to a 15-minute time frame, we can see here on the 15-minute time frame this upward impulse wave. Now, if we're looking at the upward impulse wave, we can see we're definitely seeing the parabolic SARs lower. We can see our regression channel here, which is made from 3 moving averages, is lower than the current price as well. So for the day, the indication is upward price movement here. But based on the larger time frame, it's indicating that that is nothing more than a retracement. Of course, technical analysis to a certain extent is irrelevant because we're about to get the NFP figure released in less than 3 minutes. So if we get, ladies and gentlemen, the price fall below 60%, okay? So if we measure this impulse wave, we can see that 61% is here at this blue line. Now, any retracement is deemed to decline up to 60%. If it declines more than 60%, it's no longer officially considered a retracement. So that's why at 61%, a lot of traders deem that enough momentum has formed back in favor of the trend to start indicating downward price movement. So that is something we can take into consideration. But it also, if we look at the regression channel, if the price moves below here, then that's also an indication of downward price movement. Now, because we've got a price rejection level candlestick pattern here, so we can see a very large wick here, which is why there's also an arrow there. And that's very close to the entry level being indicated by our moving averages, which are forming the regression channel. I've actually moved it slightly lower to the price rejection level to take into consideration that indication there. Now, some people are saying, should we buy or should we sell? Guys, this is all going to be dependent on what is going to be released in 2 minutes' time by the NFP figure. So far, we've got a bias, okay? So the bias, like I said, on the 2-hour chart is that the price will continue to decline based on technical analysis. But like I said, the release, which is going to happen in less than 2 minutes, can change that bias. It's all dependent on what's going to be released. So if we're going to get the NFP figure coming at 150,000, which is much higher than expected, if the unemployment rate remains unchanged and doesn't increase, and also average hourly earnings coming as expected, then that can really pressure the price of gold lower because it's indicating the employment sector, the labor market is extremely strong, extremely resilient, not seeing any negative effect from tariffs. We've also seen very positive earnings season, ladies and gentlemen. So if we're going to get that scenario, then it will be in line with technical analysis for the price to decline. If we're not going to get that scenario, we're going to get an indication that the price is going to increase in value because the risk appetite of the market is deteriorating, which is also something that we've slightly seen today to a certain extent because we're at the deadline which Trump has set for the NFP figures. Now, bear with me. Let's go to today's calendar. So in a few seconds time, ladies and gentlemen, we're about to get the NFP figure release, that unemployment rate for the US and the US average hourly earnings. So the figures are about to be released now, ladies and gentlemen. Let's quickly refresh and see what has been released. So the NFP figure has come in at 73,000, ladies and gentlemen, much lower than expected. Now, previously we saw the NFP figure come in at 140,000. It was expected to come in at 110,000. It came in, ladies and gentlemen, 37,000 lower than expected. Average hourly earnings came in as expected, and indeed the unemployment rate rose. So this is something which is potentially positive for the price of gold. And look at here, ladies and gentlemen. Look at what just happened, ladies and gentlemen. We can see very clearly upward price movement. So we've got indications here of the price of gold to increase in value. The only thing I would say is you've got to be slightly cautious about slippage here because there's a lot of volatility, something which is very natural within the financial trading market, but very clear indications of upward price movement. If we go into a larger time frame, we did say certain targets if we were going to see the NFP figure lower than expected. We set one target here for short-term traders. That's just been reached, ladies and gentlemen. I said that about 10 minutes ago. So within 10 minutes, that target was reached. The second target, we're very close to reaching that. And the third target, of course, that's quite a way away. So that will take time for that to be hit. But here, ladies and gentlemen, we have a clear indication from fundamental analysis and now also from technical analysis that the price of gold potentially is going to increase in value, ladies and gentlemen. And it's not only from indicators as well. If we're looking at the indicators now, ladies and gentlemen, if we look at, for example, the RSI, the relative strength index. Relative strength index is now at 58. So that's an indication that buyers are controlling the market. The MACD not yet, because it's only been a few not even a few minutes, a couple of minutes, but it's gone higher, very close to getting onto the positive side. We've just crossed above our trend line. This is another indication here as well to signal upward price movement. Now, I've got a question here from somebody. It's a very good question. How do I deal with retracements if I believe the price is going to continue moving upwards? Well, there's a few things that you can take into consideration. You can take into consideration scaling in. So instead of opening a large trade, you can open multiple smaller trades. So for example, ladies and gentlemen, you may wish to open, instead of, say, opening 5 lots as a trade, you may instantly open 1 lot there at that blue line. And then you may open, for example, at 0.20% higher, another 1 lot, which is here, and then 0.20% higher again, another lot, 0.20% higher again, another lot, and then 0.27% higher again, another lot. So what you're doing is you're mitigating the risk and you're spreading the risk across multiple entry points. So some different entry points, different time at a different place within the market. So you're spreading the risk, ladies and gentlemen. This is known as scaling in. It's known especially when individuals want to enter a buy. There's been a lot of volatility and they're slightly cautious and scared of a retracement. Because if a retracement does happen, instead of opening 5 lots here and then you've got 5 lots with the market moving against you, it's 5 times less. So it's not much of an issue, ladies and gentlemen, and doesn't have a big effect on your exposure as well. And at the same time, if we do get the upward price movement continue and we don't get a retracement, then still the same lot size have been opened. Now, alternatively, ladies and gentlemen, what you can do, instead of, should we say, scaling in, which is one option, you can also opt to scale out simultaneously, is you can look at averaging down. So if we are going to see a retracement, you can open another trade on the dip. So for example, a lot of people, if there is a retracement, that would, based on price action, believe the retracement will retrace just slightly above the previous high. So we can see a high here, a high here. So it would, if there is a retracement going to form now at the current price, retrace, for example, here. Now, if it is going to retrace here and you open based on averaging down, so for example, a lower buy at a lower price, should we say, then what you can also do is look at, again, 61% of the retracement being regained and then entering a third trade potentially. So that's also something you can take into consideration. What's very important though, ladies and gentlemen, is you plan ahead. It's not, you're looking at the market and as everything has happened, you just open casual trades here and there. Everything is based on pre-planned trades. So a lot of traders say you should have your next 3 to 6 trades planned. And that includes alternative directions and your main bias, the main direction within the market. So that's taken into consideration, ladies and gentlemen. Now, if we're looking at the 15-minute time frame, we can see here very clearly the 15-minute time frame. We can see the parabolic SARs are still trading below. We can see the MACD is still trading higher. The signal line is also still trading higher, ladies and gentlemen. So we've got here very clear indications still of upward price movement. Upward price movement for the price of gold. Let's go back to the 2-hour charts. We look at the 2-hour chart, ladies and gentlemen. Again, this bar here has become even smaller. So we're very, very close to getting towards our full complete buy indication, ladies and gentlemen. And again, it's not only an indication for technical analysis. This is a breakout here, ladies and gentlemen. So based on that breakout, we have an indication of potential upward price movement. If we're looking at the trend line as well, for example, here, we have an indication of upward price movement. Now, somebody says here, if we're looking at a more longer term target for the price of gold to increase in value, he says, so not downward price movement, for the price to increase in value, what could he take into consideration? Well, there's different things that traders can look at. Some traders also look at, if they want more of a longer term outlook, to also look at the wolf wave theory. And the wolf wave theory says that you should look at the retracement low, the impulse wave low and the retracement high, and measure between those two levels. So we've got the retracement high here and the impulse wave low here. And based on that, that will give you an indication of where the price is going to hit. Now, it depends on volatility. So if there's a lot of volatility, the price could hit somewhere here. If it takes a long time, then the price is going to hit much higher based on this theory. Now, for those of you that want to research this theory, it's known as the wolf wave theory, the wolf wave pattern, ladies and gentlemen. So it's very similar to the Elliott wave pattern, but the great thing about the wolf wave pattern is it also gives you a target if we're going to see a correction in the other direction. So a lot of people normally tend to use a wolf wave pattern where they believe the trend is going to end. And also, if we again going to look at larger time frames, we weren't quite at the main support level, ladies and gentlemen. Support levels, the main support levels here. I mean, we've got support levels that are lower, we've got support levels that are higher. Previously, before the webinar, the live lesson session started, I worked out the average for all traders. Now, if we look at the average for all traders, the average support levels here, ladies and gentlemen, because we've got some higher, some lower. Now, we weren't quite at the support level, but it's not art. It's not like keeping within, the lines. We were very close to it. So we're also trading the price moving away from that support level, which is also another indication for us to take into consideration. If we're looking at the stochastic oscillator on the 2-hour chart, we also were at an overbought price, and we also have an upward crossover here. So here, very clearly, we have an indication of an upward crossover. That also is indicating upward price movement for the price of gold. Somebody says here, why is the price of gold increasing in value? Of course, I'll explain. We've just had the NFP figure released, so the employment figures for the US. The amount of employed individuals that have been added this month is 73,000. Actually, was it 73? Let me just double check that figure for everybody. Yes, sorry, 73,000. It was, ladies and gentlemen, expected to be 110,000, ladies and gentlemen. So it is significantly lower than that which was expected within the market. 37,000 lower than that which was expected. The unemployment rate was 4.1%, came in actually at 4.2%. So a higher unemployment rate is negative, of course. Average hourly earnings came in very high at 0.3%. That's very high. So that also supports upward pressure for inflation, which increases the possibility of there being no interest rate cuts in September, which at the moment are almost 50-50, ladies and gentlemen. So because of this, it has, to a certain extent, is deteriorating the possibility, deteriorating the prospects of the economy and the way economists and investors and institutions view the economic condition. And we can get indications of this, ladies and gentlemen. So we of the risk indicator. Look at, ladies and gentlemen, for example, we could also look at the high low index for the S&P 500. This is also something we can look at. We can also look at the greed indicator as well, which was extremely high, ladies and gentlemen, extremely high. We can see that significantly dropped. Previously was earlier on today at 75. And specifically, what a lot of institutions look at is the put to call order. That's something I'll look at in a moment. But the risk indicator at the moment, the VIX index, as is what it's known, so the volatility index, that's more than 6% higher, ladies and gentlemen. No other asset within the financial trading market, as you can see here, is increasing further. So risk, okay, the risk indicator has massively shot higher. So that indicates that people are going to be less interested in the stock market and really going to turn towards the main safe haven asset. The main safe haven asset changes. At the moment in 2025, also in 2024, it definitely was gold. And there was a lot of retail demand as well as institutional demand for gold. So that's indicating and validating the upward price movement. If we're looking at currency performance, ladies and gentlemen, we can see the best performing currency is the Japanese yen, which is a safe haven asset as well. So that also is validating the fact that there's a lower risk appetite within the market. Somebody says if we can look at the euro against the USD, I of course will look at that. And we can also see the worst performing currency is the US dollar index, which is inversely correlated with gold. Normally, when the dollar is down, gold tends to rise in value. Not always, but that tends to happen, ladies and gentlemen. Now, what technical analysis is a lagging indicator. It's one of the last indicators you see, which means you have to act very quickly, and sometimes you may even be too late. But we can also use what are known as leading indicators. Now, a leading indicator is the put to call options ratio. Now, this very simply, ladies and gentlemen, and I'm using this website. You can use any website. It's also available on Bloomberg, also available on CNBC, and so on and so forth. Now, put and calls, very simply, is on the futures market, how many sell orders there is compared to buy orders. Now, if there's a massive amount of sell orders compared to buy orders, then of course that indicates gold will increase in value, the stock market will soon decline. Now, if it's the opposite, there's very little sell orders compared to buy orders, of course, then that is negative for gold, bullish for the stock market. Now, we can see, even though that is significantly low, and the reason why it's low is also something that we can see being mirrored within the stock market, which has performed really well over the past 2 months. Nonetheless, we can definitely see it's increasing higher. It's actually at the highest point that it has been in over a month, ladies and gentlemen. Because keep in mind, this is the performance over the past year. So we can see that's increasing the value. Normally, if it increases in value above 0.17, then that is an area where it really indicates the price of gold may potentially increase in value. So we're very close to that level. But even though we're not at that level, we're at the highest level we have been in 30 days. And we can definitely see that's ticking upwards. So that, again, that's another indication of upward price movement, ladies and gentlemen. What I will look at is, let's look at the conditions of the stock market. So if I look at the S&P 500, look at these reds, ladies and gentlemen. Look at these reds. I mean, if we look at the top 10 performing stocks, only 3 of them, so 30%, are increasing in value. If I look at the top 15, okay, only 4 are increasing in value. So, ladies and gentlemen, you can really see here the sentiment within the market and why gold is increasing in value. And let's go back to the price of gold. Let's go back to the 3-minute time frame, for example. Guys, it's still increasing in value. And remember, I said you can look to scale in, and we looked at multiple entry levels. All of those have been hit now, ladies and gentlemen, because it's still increasing in value, and all of those are in a profit. If we look at the target we looked at the very beginning of the session, and you can rewind and go and look at the 3 targets we looked at. We looked at a target here which is very close to being hit, a target here which has been hit, and a target here which has been hit. So 2 of our 3 targets have been hit. The third one is it's just been hit, ladies and gentlemen. So in a very short period of time, just in 16 minutes, our targets have been hit. So if we're looking at, for example, where we previously were at NFP, I'll go on to a 5-minute time frame. Where we were at NFP was here, ladies and gentlemen. These are our 3 targets. So the first target, we're looking at a profit of 0.40%, let's say. Second target, 0.60%, so that's 1%. And then 1.30%. So we're looking at 2.30%, ladies and gentlemen, just in 16 minutes. And that's not taking into consideration leverage at all. So this is the power, ladies and gentlemen, of technical analysis. What I will say is we don't want to be too greedy, okay? Because it will retrace. Now, if you enter the market because you're hitting your take profit or you've hit your target, it doesn't mean that's all I can earn and that's the end. It just means that we're at a point now where it may lose momentum. We're at a point now where it may be overbought, so potentially it may retrace, in which case I'm going to wait for that retracement. And then as it regains momentum, you can, of course, by all means, continue to trade it if that is what you're looking to do. Now, I'm going to also look at other assets as well, because a lot of people have been saying, especially the euro against the USD, a lot of people mentioned the euro USD to us. But really good to see in 60 minutes, our 3 targets have been hit. So let's now go to the euro against the USD. So if we're looking at the euro against the USD, we can see we've retraced back to that trend line as well. So here we're at the trend line. So because we've gone back to that trend line, and also if we're looking at here, we're very close to seeing divergence, because you can see we've got a lower tip here. But if we go to actually our stochastic oscillator, the tip is not necessarily to that level. And if we also go to our RSI here, we are seeing divergence. So this is something we need to be slightly cautious about. Now, we've got to that trend line. We've seen a lot of upward volatility as well. So what I would say, because we've gone to that trend line, it's already increased in value by 1.40%. Because we've got to that trend line, ladies and gentlemen, we have to be cautious of a retracement. So if I go to a 3-minute time frame, doesn't necessarily mean in the medium to longer term it's not going to increase higher. But if I look at my 3% time, my 3-minute time frame, and I look at my RSI, the RSI is trading at 84 mark, the 84 mark. Now, some technical analysts, they look at 75 as overbought. Some look at 80 as overbought. Some even look at 85. Very few people look at 85. No matter which of those you're looking at, though, you're at an overbought price. And it's not gold. This is the currency market, and there's different characteristics to the currency market. Now, if we go to a 5-minute time frame, you can see we're still at an overbought level. If we go to a 15-minute time frame, we're still at an overbought level. And even if we go to a 30-minute time frame, we're still at an overbought level. So even though we've got indications of upward price movement in the medium to longer term, what I will say, ladies and gentlemen, is in the ultra short term, just be really cautious and careful for a loss of momentum and a retracement. Now, when I say retracement, I'm not saying a massive retracement. It could be a drop of 0.10%, 0.15%, something along these lines. But either way, you have to be cautious of that. Now, because I can see a lot of people at the corner of my eye are saying buy Euro USD. If you want to be cautious about this retracement, but still want to buy the Euro USD, there's two things that you can potentially do. Now, one thing you can do is not trade at the moment. Wait for the retracement. So, for example, a retracement may look something like this, for example. And then you wait for, again, 61% of the retracement to 61% of the retracement to be regained. Okay. And as it's regained, you can enter your trade there, which is also a lower entry point. Because don't forget, when we buy, we want to definitely buy, but ideally at the lowest price possible. So you're entering at a 0.21% better entry level. And of course, at that point, most likely you still will be slightly above the trend line as well. So that's one option that we can potentially look at. Another option that we can potentially look at is that because you want to buy, you can of course instantly buy, which is at this level here, but a relatively small trade because we're cautious about a retracement. And then what you can do is you can look at the general size of retracements, which we tend to see. So for example, if we look at this upward price movement, the retracement is 0.41%. If we look at here, the retracement is 0.34%. If we look here, it's 0.50%. And by doing this, and you look at multiple retracements, 0.42, you start to get an average size of the retracements. So you've got a good understanding of what the retracements tend to be. And here I'm measuring upward price movement. Even when we're looking at the downward price here, for example, 0.47. So just by looking at this, I know on average the retracement tends to be, not always, but tends to be between 0.40 to 0.45%. Now, if we're going to see a decline, we've entered the buy at the current price. The current price is there. And then at 0.45%, which is basically here, we can look to average down. We're not looking at the martingale strategy, but we can look to average down. So here, for example, and if you want to be extra cautious, you can maybe put it slightly lower just to make sure you're not entering too early. And just to give some extra space because there's already been a lot of volatility. So for example, at this level here, you can enter another trade and you can potentially even enter a trade which is a larger size. This will lower the average price which you're entering at, which gives you a better opportunity potentially for an upward price movement. This is a theory and a strategy which is known as averaging down. So you can Google it. It's a very well-known strategy. So that's something you can take into consideration as well. Both options is, of course, something that you can look at. But for sure, as the prices currently seem a lot of volatility, we are moving above that trend line. As we move above the trend line, there's a stronger buy signal, but also a stronger signal that the price is going to temporarily slightly retrace at some point as well. Now, the other thing also, which is very important to look at when you're looking at the Euro USD, is also to look at the performance of the Euro and the performance of the US dollar within the day. Because what you want to do is trade against the US dollar if you believe now the US dollar is going to decline because of NFP, but against the best performing currency. You're not going to trade against the US dollar with the weakest currency. That wouldn't make much sense unless there's a specific reason that you wish to do so and that you believe something is going to change very soon. So the best performing currency of the day is the Japanese yen. Then it's the euro, then it's the Australian dollar. Worst performing, like we said, of course, is the US dollar. Now, what you would keep an eye on is to continue to make sure the US dollar is the worst performing and continue to ensure the euro is performing well. Okay, so if the euro starts to become the worst performing currency out of all of those, excluding the US dollar, so for example, the Australian dollar, Swiss franc, pound, New Zealand dollar is performing better than the euro, then the chances of an upward price movement for the Euro USD starts to weaken. Now, like I said, the Japanese yen is the best performing currency at the moment. So, for example, if we look at the euro, I'll measure this actually. If you look at the euro, US increased by 1.27%. If we go to the US dollar, excuse me, against the Japanese yen, that's increased more or less the same size actually, but it is now lower than the trend line significantly. Also significantly lower than the 50 level on the RSI. Very clear downward price movement here on the MACD. Got a slight indication of oversold though as well. But nonetheless, we're looking at a similar situation here, the US dollar against Japanese yen. So this is also another alternative. And don't forget, this is a better performing currency than the euro. At the moment though, what you can also do, look at the euro against, apologies. Look at the euro against the Japanese yen. So for example, if I go to the euro against Japanese yen, you can see for the day, if I put a day separator. So the day started here, and you can see the euro's lower against the Japanese yen at the moment. Slightly increased higher, slightly, but nonetheless it's lower today. Now, something which is also going to be massively hit by this is also, of course, the NASDAQ, also the S&P 500, the Dow Jones, but also other global indexes as well. They will definitely be hit by what is released as part of today's release. So if we go to 2-hour chart and we look at the NASDAQ is seeing indications of downward price movement, which trading below both trend lines. The MACD is low as well. We're lower than the signal line. If we look at the RSI, and we change it actually to, I think, change it to 75, 25, and add a 50 here for you guys. So it's clear for everybody to see. We're not at an oversold price. We've got no divergence. We can see we're seeing lower lows on the actual price and also on the price of the RSI. Crossover downwards here as well on the MACD. Slightly oversold indication, but only slight. But here we've also got an indication that the price of the NASDAQ will decline because that price movement on, and I'll go on to a smaller time frame. Actually, I'll go to a 3-minute time frame. There we go. If we look at the price movement on gold, we can really see that the lower risk appetite of the market is driving the price lower. Of course, stocks are massively entwined, influenced, impacted by the market sentiment and the market's risk profile, their risk appetite, which at the moment is taking a very big hit. And that's why the price is declining. This is why we're seeing indications that the price will decline. We're trading below the 200 bar simple moving average. We're on the lower side of the MACD as well. We're on the lower side of the RSI also. So we've got here indications of downward price movements. Let's zoom in slightly. There we go. Now, if we're going to look at the retracement as a whole, which is basically here, we're currently at the level where we can start to speculate downward price movement here. Okay, so we just crossed below 61%, the 61% mark. So that can potentially indicate downward price movement. Of course, we did get an indication there, but it retraced. Only retraced though for 6 minutes. And we can see the price is moving back downwards in favor of that direction again. Now, a lot of the time, this first signal can be a false indication or indicate, for example, a false breakout. The second signal, if it instantly happens in a very short period of time, really can indicate the direction of the trend. Now, we're looking at downward price movement. If we're looking at, here, because we're below the trend line, the sentiment line, we're low on the MACD, low on the RSI, lower on the stochastic oscillator as well. We've just had 61% regained momentum. We can look at a breakout if we wish as well. The breakout will be at this price, which is almost met. But we've got other indications as well. The VIX is trading lower, ladies and gentlemen. The put to call ratio is trading higher. If we're looking at the fear and greed index is still on the greedy side, but because of the previous price movement, if we go to the NASDAQ component, let's have a look at this. We've got here indications very clearly of potential downward price movement. Why have we got indications of potential downward price movement? I can show you. Now, there's multiple theories that a lot of traders take into consideration. Where's my calendar gone? My calculator, sorry. Bear with me. Now, I've got my calculator here. Now, a lot of economists will look at the top 11 stocks, which is basically the top 10 companies, because Alphabet, which is Google, has 2 stocks. So they look at the top 10 companies, top 11 stocks. Only 2 stocks are increasing in value. So we're looking at, ladies and gentlemen, approximately 18% are increasing in value. That's very low. That's indicating that the price of the NASDAQ is going to decline at the moment. This, of course, can change, but at the moment, that is what's currently showing. A lot of people also look at any stock which holds a 0.5% weight and above, which is basically the top 28 companies here. We're looking at the top 28 companies, so basically anyone that holds 0.5% and above weight of the index. How many stocks have increased? 1, 2, 3, 4, 5, 6, 7, 8. 8 out of 28. Okay, so if we look at 8 out of 28, 28% are increasing in value. 28%, that's extremely low, ladies and gentlemen. So 72% of those stocks are declining. 72%. So that is a big factor, ladies and gentlemen, a big indication of downward price movement. Ideally, we want, though, the VIX to remain high. At the moment, it's slightly retraced, it's slightly lower, but we want it to remain high. Now, let's go back to the price to see how the price is developing. It's retraced slightly higher. Keep in mind, the market is about to open. The market is about to open. And we've got another 8 hours of trading for the US session. So there's a lot to still take into consideration. Now, do we have any questions, ladies and gentlemen? I can see I've got a question here. Someone's saying here, can we share analysis? If you register with HFM, we have Telegram groups where we share signals, share analysis, share the latest market news. We also have a news section on our website. Also take into consideration that there's free webinars 2 to 3 times a week. In these free webinars, it's not a presentation. A lot of brokers, they just have a presentation. It's not like that. We have polls, we speak to each other, we communicate, we share our experiences, we answer questions. There's a lot that we look at. Somebody says, can we also look at Bitcoin? Bitcoin, ladies and gentlemen, is not seen necessarily a change in its traditional volatility levels. Don't forget that it's not directly impacted by gold. So you can see here, nothing really has changed. Keep in mind, other assets such as gold, currencies, the NASDAQ stocks, even oil. Look at oil, ladies and gentlemen. We can see an increased volatility level there. All of this has a direct impact from NFP. Now, if we are going to see deteriorating economic conditions, then actually gold potentially could decline. But that's something we need to see if we indeed start to get deteriorating conditions. We've seen a slight dip over the past 48 hours, but it's retraced higher. Let's see if we continue to get that dip. That's something we'll continue to monitor. So guys, do we have any other questions before we end today's session? really interesting because we've suddenly, for the first time after not being able to see higher unemployment rates, we finally have had a higher unemployment rate. NFP figure was lower than expected, and salaries are also increasing. So a lot of things which are indicating potentially upward price movements for the price of gold. We looked at three potential targets. All of those targets have now been hit, ladies and gentlemen, in just a period of 50 minutes. But of course, let's see how the price continues to develop. So, guys, that's the end of today's session. We've looked at everything that everybody has asked to look at. We've looked at gold. We've looked at the Euro USD. We've looked at the NASDAQ. We've looked at also how we can validate signals through fundamental analysis. For example, looking at the VIX, looking at the high-low index, looking at component analysis, looking at the put-to-call order ratio. So that's all things that we can take into consideration. So, ladies and gentlemen, that's the end of today's session. Hopefully, you enjoyed our search session and our analysis. Enjoy the rest of your evening. Have a lovely weekend. Of course, always, as I say, trade safe, trade responsibly. Hopefully, you found this educational and informative. But in the meantime, enjoy the rest of your day. And if you do need any assistance at any point, of course, feel free